Hey everyone, welcome to the Explainer. Okay, let's dive right into this because if you've been watching the markets, you know the financial world has been absolutely captivated by the wild market surge of Zcash in 2026. Look, privacy coins have had a really rough go of it lately, right? Heavy regulatory crackdowns, exchange delistings, the whole shebang. But then, out of nowhere, Zcash breaks from the pack and completely rewrites its own story. We're going to break down exactly how and why this happened. We'll look at the raw data, the big institutional moves, and the underlying tech that fueled this absolute monster of a breakout. 110%. Just let that sink in for a second. That is the staggering 30-day gain Zcash posted heading into early May of 2026. I mean, for an asset that a lot of people had completely written off because of those regulatory headwinds, a surge of this magnitude is, well, it's nothing short of historic. It outpaced almost every major altcoin out there, and it did this while Bitcoin itself was just kind of moving sideways. So what exactly fueled this massive rally? It wasn't just random market noise. No, this was a perfectly timed collision of institutional money, shifting regulations, and some serious underlying network resilience. Section 1, the 2026 Zcash price surge. Let's look at the May 2026 breakout. So to really understand a market move this aggressive, we have to look at what I like to call a catalyst cascade, a series of dominoes falling in perfect sequence. As you can see, by May 6th, the peak price smashed right past $585. That's a massive 30% intraday surge. But I want you to notice that third metric. This is the real engine of the volatility here. $59 million in short positions were liquidated in literally just 24 hours. See, Zcash had been heavily shorted by traders who were betting against privacy coins. So when a sudden wave of positive news hit, it triggered a violent short squeeze. Basically, the bears were forced to buy back in to cover their losing bets, which just rocketed the price upward and pushed the total market cap to a staggering $9.7 billion.
Moving on to Section 2, the Multicoin Institutional Catalyst.
Okay, so what was the actual spark that ignited that massive $59 million short squeeze? Well, it traces back to a huge disclosure from a heavyweight in the venture capital world. Quote, Zcash is a return to the cypherpunk ideology. That's directly from Tushar Jain, the managing partner over at Multicoin Capital. He actually posted this as part of an official disclosure revealing that his firm had been quietly and very strategically accumulating a massive Zcash position since February 2024. This wasn't just some quick speculative trade. No, it was a fundamental validation of the privacy narrative by serious institutional money. And you know how it goes. When a major fund known for early, successful bets publicly backs an asset, the rest of the market pays attention. But, like we talked about, it takes a catalyst cascade to move a market this fast. Let's look at the compounding factors that created this perfect storm. Right as Multicoin revealed their massive Zcash position, we also saw a late April relisting on Robinhood. This was huge because it immediately unlocked immense retail liquidity that had literally been cut off since 2022. Then combine that with the Grayscale Zcash trust filing updates, which the market immediately took as a signal for a potential ETF conversion, and you've got this rare explosive alignment. You have everyday retail traders and top-tier institutional funds gaining access at the exact same time. And if you take away anything from this, it's that when both sides of the market pile in at once, explosive volatility is pretty much a guarantee.
Which brings us to Section 3, a historic regulatory win.
Historically, the watchful eye of the government has been the absolute biggest hurdle for privacy coins, hands down. Investors have been terrified of holding an asset that might suddenly become illegal to trade. But 2026 marked a massive pivot. On January 15th, the Zcash Foundation received notice that the SEC was officially ending its investigation into Zcash, with absolutely zero enforcement actions taken. So the crucial point is, this leniency, especially when you couple it with pro-privacy statements from influential figures like SEC Commissioner Hester Peirce and Paul Atkins, it essentially unbanned Zcash in the eyes of big funds. Regulators moved away from this rigid, one-size-fits-all ban, leaning toward a more precise, pragmatic regulation of privacy tools. And honestly, this clearance was the exact green light those institutions were waiting for.
All right, Section 4, Zcash versus Monero.
To really wrap our heads around why regulators gave Zcash a pass, we need to look at the broader privacy sector's David versus Goliath tech rivalry. Over on one side, we've got Monero, which operates on privacy by default, meaning every single transaction is mandatorily hidden. Now, it's highly censorship-resistant, but its uncompromising nature means it faces widespread exchange delistings globally, like in the EU and South Korea. But on the flip side, there's Zcash, utilizing privacy by choice. Zcash uses a dual address system. So you can use a transparent address that acts just like Bitcoin, completely regulator-friendly, and super easy for exchanges to comply with compliant tracking. Or you can opt for a shielded address for full confidentiality. This flexible approach is exactly why regulators are targeting one, while institutions feel totally comfortable buying the other.
And the specific technology making that privacy by choice possible? It's called zk-SNARKs. Yeah, it's a bit of dense tech jargon, but you really need to know it. Zk-SNARKs are advanced zero-knowledge proofs. Just think of it as mathematical magic that lets the network fully verify that a shielded transaction is completely legitimate without ever revealing who sent it, who received it, or how much money was actually moved. It maintains the absolute integrity of the blockchain while giving the user total confidentiality. Pretty brilliant, right?
And that mathematical magic, it translates to massive real-world adoption. 4.5 million ZEC. To put that into perspective, as of late 2025 and into 2026, roughly 30% of all circulating Zcash is now securely locked up in the network's shielded pool. This proves that this tech isn't just some theoretical experiment anymore. It is seeing massive real-world adoption by users who specifically want these privacy features. They aren't just treating it as a speculative trading token. They are actively using the tech. Section 5. Overcoming the developer exodus. Now, 2026 wasn't just a straight rocket ride up for the Zcash ecosystem. In fact, right before this massive price explosion, the network faced a terrifying existential crisis. Let's move to this timeline and see how this builds. On January 7th, the entire core team at the Electric Coin Company, including the CEO and chief scientist, suddenly resigned over internal governance conflicts. I mean, this developer exodus caused a massive initial price drop as sheer panic set in. But then, just 8 days later, on January 15th, the SEC officially drops its investigation. And fast forward to May 6th, that Multicoin disclosure sparks the historic $585 market rebound we've been talking about. So how on earth did the network survive losing its core developers? Well, as the Zcash Foundation put it, no single contributor, team, or organization controls Zcash. In fact, Zcash was deliberately designed for resilience. And that's exactly what happened. The network's decentralized architecture simply absorbed the shock. Independent developers and the foundation stepped up and kept everything running smoothly. Because the actual blockchain didn't break down when the core team left, the asset's price was eventually able to completely decouple from all that internal drama and respond to the bullish macroeconomic data instead. Moving to our final section, Section 6, AI Predictions and Outlook. We've looked at the history and the major catalysts, but how do top artificial intelligence models view this heavily overbought, high-momentum asset right now? Now, what's really interesting about this slide is the sheer variance in how the AI interprets the exact same data. We've got the Finbold AI acting as a sort of middle ground here, predicting a stabilization around $589. But look at the extremes. DeepSeek Chat predicts a bearish pullback down to $520, signaling it thinks the asset might be way overextended after that 110% run. Contrast that with Grok 4.1, which outputs a highly bullish target of $723. Grok basically thinks the institutional momentum and those short squeezes have a ton of room left to run. We've covered the tech, the massive regulatory breakthroughs, and the huge institutional bets that completely defined the 2026 Zcash explosion. But it leaves us with one profound question as we wrap up this explainer. Is selective privacy the ultimate future of digital cash? Can this carefully engineered compromise, balancing the cypherpunk ideals of total financial anonymity with the strict compliance demands of global governments, cannot truly be the winning formula for the next decade of finance? I'm going to leave you to think about that one. Thank you so much for joining me today, and keep questioning the data.